Hello friends, we'll be discussing another concept or rather illustrations which are related to issue of debentures now. Now when we speak about issue of debentures, we understand that this is on the same platform, on the same criteria how equity shares are dealt with or rather preference shares are dealt with. Now, instead of equity share capital, we have debentures account, and instead of equity share application, equity share allotment, we have debentures application, debentures allotment. So that is the only difference that we have when it comes to issue of debentures for cash or for consideration other than cash or as a collateral security. Now, the first thing or rather the first few illustrations that we are going to discuss in this specific video or rather in the upcoming videos will be only about for issue of debentures for cash here. It may be at par, it may be at premium, it may be at discount. So let's figure out with the illustration that we have or rather that we have to prepare further going ahead about what kind of issue of debentures are we talking about. Let's start with the illustration. So this is a simple illustration that we're talking about. It is about B Limited who has issued 2000 debentures. Now, they have issued 2013% debentures because as this is debenture, we're supposed to provide interest on the same thing. Hence, debentures, unlike shares where there we have to provide dividends, here in debentures we have to provide interest. So 13% debentures were issued of rupees 100 at rupees 110. That means face value of the debenture is 100, you are issuing it at 110, which clearly states that there is a premium that you have been paying here or rather a premium is being paid up. So that means every person who is applying for this debenture will have to pay 10 rupees additional as a premium. Like this, such 2000 debentures were issued for subscription. Now the payable amount was as follows. That means the bifurcation of 110 was as follows here. On application it was 25 rupees. On allotment it was 35 rupees, which includes the premium as well. On final money it was rupees 50 or rather final call it was rupees 50. All the debentures were fully subscribed for and the amount was also duly received on time. We have to prepare the pass book or rather the cash book or the bank book. It's the bank book itself that we have to prepare here. The journal entries and the balance sheet. These are the three requirements that we have to prepare. So we'll first start with journal entries now for this debentures. So the first entry will be in the part of or rather in questionables to receipt of application money. Now application money is referred to debenture account, hence we'll mention the similar entries here. Let's start with the same thing. Now, the total debentures that were issued was somewhere around 2000. Application money was rupees 25. So 2000 multiplied by 25 will give you somewhere around the same amount of 50,000 here. So that means on application we have received 50,000. Now, the next question or rather the next step here arises as whatever application money we have received, we have to move it to debentures account. That means 13% debentures account we have to transfer it to. This is unlike in equity, we used to transfer it to equity share capital. Here we'll be moving it to debentures account. So let's move that. Now, the next entry will be allotment due. Here, allotment includes premium, hence we'll be debiting or rather we'll be crediting the premium account as well. So let's start with the allotment entry now. Now, the premium that we had to take care of is rupees 10. The total allotment money refers to 35 rupees. That means out of 35, if 10 rupees goes for premium, rest 25 will go towards debenture capital account. So the total debenture allotment, the entry that we have passed here is debenture allotment account debit to 13% debenture to securities premium or share premium, whichever you can call it. Now, the total allotment will be for 2000 multiplied by 35 rupees. Debenture capital will be 2000 multiplied by 25 and securities premium will be 2000 multiplied by 10 rupees. Now, we have to mention the amount and we'll state the narration here. So the total allotment here will be 70,000, out of which 50,000 will be capital and 20,000 will be premium. Now that the question stated that everything that was due was duly received here, hence when we pass the allotment received entry, it will be bank account debit to 13% or rather debenture allotment account with the total amount of 70,000 here. Let's mention that. Now, the next set of entry that will be passing here will refer to the specifications of final call. Let's start with that. Now, let's pass the entry which is related to debenture final call here. Now on final call, we were supposed to take around 50 rupees per application. That means 2000 multiplied by 50 will be the amount that we are expecting here. So the total amount that we are expecting here is 2000 multiplied by 50, which will give you an amount of 1 lakh rupees. Let's mention the narration. This is the allotment or rather the due entry for final call. Now that the final call entry has been mentioned, let's pause the narration and we'll close the journal entries here, post which we are going to start with our formation of bank book or cash book. So the total amount that we'll be mentioning here is the receipt of application money, receipt of allotment money and receipt of the final call money, which will be the bank account details. Now, the entry that we have passed every time when there was a receipt here was bank account debit to debenture application, bank account debit to debenture allotment, bank account debit to debenture final call. Now, every time bank account was debited, hence all these entries will be mentioned on the debit side of bank column. So let's mention that. So here we have mentioned all the entries which are related to the bank column. Now let's go ahead and figure out what is the total and what is the balancing figure here. So the bank account shows a balance of 2,20,000. Now that we have all the details, we can simply go ahead and prepare the balance sheet. That will be the last requirement of this illustration. So let's start with the preparation of balance sheet now. Now, when it comes to preparation of balance sheet, on the liabilities side, we have debentures and securities premium. Securities premium will be 20,000 and total of debentures is 2 lakh rupees. Similarly, on the asset side, we have bank or rather cash and cash equivalent, which is 2,20,000. So let's mention that. So the final total that came up for the balance sheet is 2,20,000. We have mentioned this here and this marks the closure of this specific illustration. So this was the basic and the simplest example that we could give just to make you understand how debentures journal entries are supposed to be passed and how things work out when it comes to the differentiation between equity applications and debenture applications. So I hope this video has given you a lot of clarity about it. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.